Hello traders. Now if you are into day trading, especially US stocks, or for that matter any market that has a predefined open, this hack could be for you. Add it to Renko charts and it becomes even more powerful and obvious. I absolutely love it, and we're going to dive into it right now and see how you can use it in your trading. So let's get started. So before I show you a chart of what it exactly looks like, I want to just take a bit of time to explain the idea behind the ORB. That's the opening range breakout setup. Now, a lot of the world's markets, especially those with predefined openings, not those ones running 24-hour, maybe like Bitcoin, or some of the Forex markets that are nearly 24-hour, certain markets have like an opening time. Now, why is that important? Well, because as the previous day closes, there's a lot of orders coming in. Before the market opens, there's a lot of orders building up. There's a lot of activity. A lot of news has happened overnight. So what happens in that first few minutes of the trading session is a huge percentage of the activity is played out within the first few minutes. And then after that, it settles down into a direction that it wants to take. But how do we measure that? Well, that's where the ORB comes into effect. And like I said, once you add it to Renko charts, it does really become obvious, a straightforward, simple strategy to use. And like I said, you can use it for US stocks and options. That's where I trade it most. It can give you an idea of the trend direction intraday as well. It can help you with stop loss for intraday stock trades, but also I like to trade it on some of those stock indexes that open earlier in the day in the UK time, something like the DAX or the FTSE 100 that again have predefined opening times, pre-market sessions, building up the pressure for those first few minutes, and then, you know, like I said, it creates an opening bar range, and from there it'll explode out either way, and we want to take advantage of that. Now, I always like to keep my strategies as simple as possible, so we're going to look into a simple setup. Again, you can manipulate it how you like. This is to give you an idea of how you could potentially add value to your Renko charts, intraday trading of those type of markets. So let's have a look now at the charts. So straight into an example here then, we've got Microsoft. It's a Renko chart you can see there with a 0.8 block size. That's an 80-cent block size. It's smaller, it's more aggressive on the block size because it's intraday. We're not looking for long-term trends, we want short-term price action. And what have we got on the chart? Down the bottom we got a stochastic indicator, slightly modified there, and if I just click on that, there we go, we can see the settings. I've got it set to 5, 3 and 20. Helps me define the trend and entry and exit points. On there we got a moving average, just 7 periods, and we've got there that red line there, that's the super trend set to 10, high low 2, multiplier 3, again another trend indicator. Now I'm not going to use all of these three, but these are 3 indicators I suggest that you could take a look at when building such a strategy. Now the block, this is the important one. This is the ORB. This is the opening range breakout. So let's click on that, bring up the properties. I've got this one set to the first 5 minutes of the day. You can do that by changing these times here. Obviously color variables. I've got some other inputs. Change the colors, like I said, if you want. You can put on highs, lows. You can find this in Trading View by just going up into the indicators and typing ORB, and then you'll get this. It'll add it on and then change the inputs. Now, like I said, that's the first 5 minutes, but for example, you might say you want to ignore the first 5 minutes and let things settle down and take the next 5 minutes maybe as your example, and it'll recalculate and it will put a new ORB opening range break there from, that would have been 2:35 to 2:40 US time there, and again that then gives us our starting point for the day. So below the price below the orb, that is bearish, and above the orb, bullish. Let's just reset that back to the 930, 935 setup that I had before. Okay, you can actually see it's slightly wider, and you'll see this quite commonly, that the 930 there to 935 is going to be wider than the 935 to 940, just because, you know, though all those pre-market trade orders and everything are coming in, you know, earnings or whatever, you're going to first 5-minute frenzy, and then it starts to calm down. So it's totally up to you how you want to set this up. This is a variable that I'm giving you to help you decipher the market. Now, I've also done another video with Renko with a VWAP intraday setup. Maybe you could combine those two together. I haven't tried it yet myself, but just thinking out loud there. That's the video up there, and I'll put it at the end, a link at the end of this video, so you can follow up on that. But let's just go into this example in a bit more detail and sort of talk through the trade idea here. Now, this is the breakout that we're looking for. We want it to be moving outside either side of this block that's been created. So as soon as it does, we take a position, but we want to add extra filters on to increase our probability of success. And we've got this modified stochastic here, so I'm looking at the breakout, and if it's in the bearish position, I will take it as my extra filter. In terms of exit, you can get out when it crosses, or when it crosses back up through, say, the 20 for the bearish trade there. Also, why I've thrown on these other two indicators as well, you could maybe use the moving average to trail it down and get out, you know, when it crosses through, or like the super trend. So now this super trend here would actually keep you in the trade longer in this example. So maybe you're not getting cut out early, staying in longer. It might move on back, you know, further down, so you get more risk return for your buck. And if not, it comes back through when you get out there. You're probably going to give away a bit more profits using that one. I like the stochastic and the block together. What I haven't put on here also is you might think about a longer term moving average, again, to just cement the trend direction. So like if it's above it, we're bullish. If it's below it, bearish. Where am I going to put my stop loss? Well, let's just clear the mess away there. There we go. So this example here, we're in here. Now what I do is I put my stop loss just the other side of the box there, and then that gives us our risk for the trade. And what you're looking for, because we're using the signals to get out, it's not so much a risk return trade, but we are looking, I suppose, on average from anywhere from 0.8 to 1 up to 2 to 1, depending on the markets that you're using. That's the sort of risk return we want from the trades. Why we can go less than 1 to 1 is because it has a high win ratio. I'd say around 65 to 75% on the win ratio from my own backtest data. Again, test it yourself before you commit to this sort of strategy. Do your own due diligence, but that's sort of numbers we're looking at. Now that is my stop loss method there, but I've also tried other methods like average true range, moving averages, that sort of thing, to come up with the stop loss. So maybe you could be more aggressive, put your stop loss behind the super trend or the moving average as it comes out here. Average true range you could take. And what about other exit strategies? If you're not going to use the indicators, you could use a risk return 1 to 1 maybe, and then maybe you could get to 0.8 to 1 and then start trailing it down. But important to build up a portfolio of statistics data around this, so you can see what your results are, so you know where it takes away a lot of psychology from the trading, especially if you know what the results are. But as you can see from this trade, again, if we remove the drawings and we just work out what we'd have picked up on this trade, let's put on a short position. So we came in here stop loss just about there, and at the absolute best, at one point it was a 1.44 to 1 trade. Some people like to, with those who know aware of this strategy, sometimes like to get the reversal back. So we see a nice big move down here, that's one trade, and then moving on back towards the orb. Now if it does move back and goes through, we are then bullish if all our other indicators are adding. So you sometimes get another trade where the blocks build up on this side as well. So let's just quickly have a look at this at play on, say, the FTSE 100 stock market. So here's the same day as the Microsoft trade, and this time I've just changed that shorter term moving average, which is, we said it was 7 period, to a 50 to give us a trend direction. I like to get the trend direction more on the indexes, and for these ones I really like the first trade of the day rather than trying to chase it for the rest of the day, unless there's some news event coming out, interest rates or non-farms or that sort of thing. But as you can see here, we're above the moving average. The stochastics at the bottom are all positive. We've broken out, we get in, we might get out on the cross of the stochastic. So it's not a great trade, but we've made some profit. And again, depending where our stop is, if it was just under there, we might have, let's just work that out quickly. Long position, say we got in out here and we got out about there. We're not talking a great risk return, 0.5, 0.6 to 1 maybe, but higher win rate I'm finding on the indexes than the stocks. So that first move is more predictable. Again, test it out yourselves. I like it on the DAX, the FTSE. You can try it on the S&P, the NASDAQ. If you don't want to trade those two, maybe the SPY or the QQQ as well as an alternative to that open. So here we've got the SPY, and for those that don't know, it's basically an ETF for the S&P 500. So it's another avenue in for traders to get their hands on exposure to that market. But same rules apply to this strategy. We got the 50 moving average there, price is below it, so we are bearish for that period. We look down, actually at the start we moved quickly to the bearish side. Actually it broke out down here, and again that married in nicely with that stochastic going short as well. Reason why I like also putting this box over the edges is a lot of noise can play in and out here, and you can get a lot of false signals. So when it does move out, find it more accurate. Now again, we break out. You could add your stop loss there, your stop loss there, maybe really aggressive stop loss, the super trend, to improve the risk return. So let's just have a quick look at this short trade here. So our entry point, so in exit terms we could have got out down this, let's just highlight that, say the cross of the stochastic, or maybe a fixed risk return number. So let's just get back onto that. So if we got out at that cross point, which is roughly about there, and we had our stop way up there, we got 0.46 to 1, just above the moving average, 0.67, maybe a really aggressive super trend trade. Then you're talking 2.63 and a half to 1. It starts to add up. But again, as you get tighter with the stop, the higher your loss ratio becomes. So again, test it thoroughly before you get into actually going live with this strategy. And like I said, combine it in with other variables like the VWAP video that you can watch as well. But this is just a really simple one, great for stocks, great for stock indices or any market, even commodities that have predefined opening times. So there you go, that's the ORB strategy Renko hack. It's going to improve the probability, odds of success around your intraday trading. The Renko helps smooth it out, so the combination very, very useful indeed. Add the other indicators to make it even stronger still. If you're interested in trading that though, do your own homework. It varies by markets, the results. It is a good consistent strategy, but like I said, always do your own back testing, your own due diligence before committing your own funds. If you do use it, let us know in the comments below. Let me also know what you think of this as an idea. If you like the video, also please give us the thumbs up. Don't forget to hit that subscribe and bell buttons as well to get future notification around content that I'll be producing just like this. Any suggestions also welcome as well. If there's any content you'd like to see me making, love to hear from you there. Now, if you've liked the Renko charts and want to learn more, and also I promised you that video about the VWAP Renko as well in the video. Well, links to the playlist about learning about Renko, work your way from top to bottom to master the art of the Renko chart, and the VWAP Renko strategy video, all coming up now.